What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're going to be talking about a little bank. You may have heard of it, JPMorgan Chase, ticker JPM. We've got the usual suspects. Trevor checking in from gloomy Toronto. Jim, Dean, Kurt, what's up, man? How you doing? It's been a while. So yesterday's show, essentially what happened, I said, let's just go ahead and wait. Because as we've seen in the past, Delta doesn't really move a lot on earnings. And then afterwards, it does the drift. So that's kind of the formula I thought would work there for Delta. Today, we're going to roll some dice. Today we're gonna make a move on JPMorgan Chase. If anything, just to get a feel of where this earnings season might start to go. Have a little skin in the game. Get ahead of the curve before things start popping off here for us. So we'll take a look at that later. In the meantime, I've been reading some research reports. We had our bi-weekly meeting of the minds, as I like to call it, at Zach's. It was ran by Kevin Cook, and we were talking a lot about the euro-dollar contract, not to be confused with euros versus dollars. The euro-dollar is dollar-denominated deposits overseas. And basically, it's a huge market that kind of tells us a lot about what banks' expectations are for interest rates, which can help us figure out what's going to happen with the yield curve and things like that. Now, I know a lot of you equity guys kind of gloss over when we start talking about yield curves and such, but I am an economist first, so that's the sort of thing that really gets me all excited. So inevitably what happens in these meetings is it's John Blank, Kevin Cook, Shiraz, and I just kind of sit back and ooh and ah while we're talking, and then throw in my little tidbits, but those are the ones that I think are fun. Obviously, we've got a lot of equity guys at Zach's who aren't as excited as the economists are, but I do. It gives me flashbacks to not high school, well, kind of high school, I guess, but mostly college. So I get excited about that kind of stuff. I love it. I love economics, man. It's awesome. It's so much fun. Okay, so hey, Richard, Bruno, Dr. Paul, how you doing? Dr. Paul, were you here when I made the move? I made the move to the Z06, my friend. Didn't go to Tropical, though. Went to Sawgrass Chevy. Ed Morse, they took care of me. Aaron, snowing in Nebraska. Well, that's all right, man. I mean, that's where you live. So, I mean, it is what it is. I can't live out there because, I don't really like snow. But I guess, if I did live out there, again, not out there, but just in a cold climate, I find something fun to do in the snow. Like snowmobiling or snowboarding or skiing or something like that. You gotta have some. Oh, we've got somebody new. AE01416. Hello, I suppose. Please welcome and shoot out any questions. Yeah, Dr. Paul, we're gonna talk about. I'm not gonna bore everybody with the details here. In the chat, I'll show you. I was talking to Dave about it too. 22K off MSRP, Dr. Paul. Winning the last day of the year. That's the way to do it. Okay. Let's go ahead and dig in here onto JPMorgan Chase. As always, kick things off with the price consensus and EPS surprise chart here on Zach's. The right y-axis rather corresponds to the price, and the black line tells you that. The left axis here. Hey Tracy, how you doing? Left axis is EPS. That corresponds to these multicolored lines, which represent the evolution of our Zach's consensus estimates over time. And now, since I do see we've got a few new faces in here, everybody, just want to let you know, we've got our chat room popping at all times. It's going along the bottom of the screen here, discord.gg/P, capital BWCM, little S, and then a big G. If somebody could type that in the chat for me, that would be much appreciated. I suppose I could do it in a little bit too. I'll circle back. And then again, if you're not already hooked up on our distribution list, shoot me those emails, livetrader@zax.com, and we'll make sure we get you in. Now that that commercial is over, Dr. Paul, I'm playing Tiesto just for you, as always. Not as always, but anytime I do play Tiesto, it's for you. So, what do we have here? You know, a little bit of choppiness here into 2013, 2014. You get these sort of patterns where JPMorgan kind of says, "Oh yeah, we're gonna grow, we're gonna get that much," and then something inevitably always just snuffs it out, right? Snuffs out what they think is going to be great. However, a little something happened following Election Day. All of a sudden, all of these started getting ratcheted to the upside, and have continued to ratchet up to the upside. And I think, my friends, is just beginning. Look at this one. Whoops! Look at that. Huge spike, actually, in the 2018 numbers here. Now, why is that, folks? Tax cuts. So I saw just one company attributing a 13% increase in EPS this year just to the tax cuts alone. So that doesn't count, GDP growth or the state of the business improving or anything like that. Even interest rates, really, they didn't factor that into the equation. Simply the tax cuts, ceteris paribus, 13% hike. That's pretty significant. Now, here at Zacks, being the earnings people, we would say, well, hopefully that translates on through to a 13% increase in the stock price. So as long as the multiple stay the same, but if you get multiple expansion, then that could look even more attractive. Multiples is something that we're going to check out later, but this is the point here, is that you got 2016 ending here, 2017 estimates starting there, ending all the way up here, 2018 estimates still moving in a very positive direction, not what you saw in any of these previous years. So that, my friends, is very bullish for shares of JPMorgan Chase in the intermediate to long term. Let's look at the detailed estimates page. We've got them as the Zacks ranked number 3 hold right now, and you'll see that's going to be because nobody is really going out there and making huge moves on their EPS estimates right now. Top 5% of our Zacks industry rank, so that means it ain't just Chase. There are several other names in the space that are doing well and have seen earnings estimate revisions to the upside, so something to keep in mind. Let's start looking at these revenue numbers here. First, 6.9% revenue growth for the current quarter. Next quarter looks like 782. We'll figure out what this is later. I don't know what's been going on lately. We've been getting a lot of this nonsense happening. Don't worry about that. Next year number 6.27%, so still looking good, increasing like neon lights. We gonna be all right. But look at this current quarter, negative 1.17% EPS growth, contraction in EPS. What the heck, man? But how much are we going to be concerned with this versus look at next quarter? 20% EPS growth. Current year looks like 11.47. Next year swelling to 17. Things are looking up. And overall for banks, you've got to say this is a pretty good environment. I was looking at a chart the other day. I need to start saving these charts so I can go over them as I'm talking to you guys, but it showed the 10-year compared to the rates that they are paying out on their consumer deposits to everybody. They're not paying much. Anybody with a savings account here can attest. I think my savings account is, and yes, I do have a savings account, surprisingly. I think everybody's got to have, you got to have buckets of money. You got to have just a little, that's essentially cash money on the side just in case things pop off. And then you actually do have to have the cash. I think I have cash here, unless my girlfriend found it. I think I hid it from her. Yeah, I did. Okay, so she doesn't know where it is. I got it right here. Anyway, not that she would take it, but she would totally find a way to take it. You know what I mean? She'd be like, "Oh, I'm hungry. Let's go out to dinner." I'd be like, "Okay," and then I'd pay for it, and then there'd go my money. All right, so let's look at the what the heck am I talking about here? Agreement. All right, so you got a few analysts getting a little bearish here. You got 4 of them dropping their number for the current quarter, 3 of them for the current year. But look at on the bullish side of the equation, it's really all about that next year. Where you've got 7 analysts that have come out and increased their earnings estimate over the last 30 days for next year. So the eyes are on the prize, and the prize is next year. I don't know if that's, I mean, I think that's going to be the theme here for this quarter. I don't think what happens in the current quarter is going to matter for a lot of these companies unless it's disastrous. And I think a lot of the action is going to be looking out towards the next year and what sort of guidance these companies are likely to produce over the course of, for the next year. So I think things are doing okay here. What's the overall impact been of this move? Some of these moves. Well, it has dropped the current quarter numbers, like we talked about. Not as concerned about that, but look at next quarter has dipped a little bit, while the current year number went up. Somebody explain this to me. I'll give you some time to figure that one out. This is the last quarter of the year, right? Earnings estimates have come down, okay, but our current year number has gone up. I actually do know the answer. What this means is there's an older, like a old estimates that have fallen off that we're not including. So I guess I cheated. I cheated there. But when you see stuff like this in the numbers, because you will come across this from time to time on Zacks, where you go like, wait a minute, that doesn't make sense. It does make sense when you think about it as almost like think of it as when you're drawing your charts and you're doing a moving average of the last 50-day moving average. Those older values kind of drop off and it changes the average. That's essentially what's happening here. But if you look at next year, 765, 767, 795, bringing that base, that 808 for next year. So that's pretty good. Pretty good for next year. Okay. All right, let's start looking, and then the surprises. We know they're just there's some decent surprises, actually. What's that string of surprises been? 1, 2, 3, 4, 5, 6, 7, 8. 8 in a row. 8 quarters of surprise. Pretty good. Pretty solid there. Let's dig into the, not that G14 classified stuff. That stuff I can't show you. But this stuff I sure can. Here's Southwest Airlines. Like, oh my goodness, look at, we've got yesterday's show is all over here. Who do you want to be our comp? Who do we want to do? Is that what we want to do? I'm trying to think. Do we need to do Fifth Third? Bank of America? Who do we want to, yeah, we'll do Bank of America. Okay. So first, let's look at these revenue numbers. And is anybody else surprised? I'm surprised. Overall revenue for JPMorgan has been down 1, 2, 3, 4, 5, 6, 7. This will be the 8th consecutive year of a drop. And we'll do that. We'll look at Citi. This isn't going to change this data though, but that'll help for later. 8 years. So a lot of this has to do with trading. These trading desks kind of disappearing, and they're not really making the money there like they used to. So there's a good chunk of that. Still surprising to see. I'm surprised to see that. Let's look at the EPS side of things. So despite these slumping revenues, the impact EPS, they just get more efficient and effective, I suppose. Because even during some of these tougher, leaner sort of years, 2012, we saw revenue contraction there, but you've got growth, 16%, 15.8, 12. Sorry, 15.8, yay. 12, no, not so bueno. 7 was good. 9, 11, 17, 13 is what we're looking at. So it's supposed to get better for JP Morgan. Let's look at some valuations. Let's do on a forward PE, I suppose. What an ugly chart, right? When you start incorporating what was happening during the tail end of the Great Recession. We're not so concerned with that. I was talking about Delta Delta yesterday, and we were saying, well, let's only look at the last few years, I suppose, of the on the earnings side. We don't have to. Who cares about 2009? I mean, it was just a freaky times, right? You can't really base anything like that. But since the market is sort of normalized, say 2014, 2015, let's just see where we're at. And you do see expansion here, still see multiple expansion in terms of forward earnings here for JPMorgan Chase. If you look at I like to look at the range. So just high-low, right? So I like to highlight that to give you an idea. Because there's a couple of things that this is going to tell you, right? That you're not going to glean from just looking at the median. You're going to see how extreme things have been in terms of valuation, which gives you a clue as to the volatility of the stock. So you can see the range tightened into 2017, their PE range, but really about 13 times earnings, 12.5 times earnings, forward earnings, that is. It's kind of where you're looking at for JP Morgan, and now we're at 13.6. So a little richer than Citi, Dr. Paul, a little richer than Citi. Let's see how it is compared to the sub-industry. So this is all of the banks, not just all of the major regional banks. And that's how we have JP Morgan classified, whether you like it or not. Pretty much spot on with the rest of them, okay? And we can go ahead and put in individual tickers here if you want. Look back at Bank of America since we were talking about that earlier. See, look at right on, spot on. Citi, this kind of thing. So we're all, even let's put in a Wells Fargo. There you go. They're all pretty much right in the same place when you're talking about forward PEs. Okay, so that's good because one thing we're looking for here in this quick little analysis is we don't want to see JP Morgan being way overvalued or way undervalued on a forward PE basis compared to the rest of its peers, because that might clue us into something's going on over there, right? So nothing like that. So basically what's good for the rest of the banking industry should be good for JP Morgan here, and they're all pretty much going to move along with each other. That's what this tells me. And another thing, when you're looking at these banks, you don't necessarily want to look at the sales. Rather look at the book. And here you can see there has been a little bit of richness in the price to book ratio, JP Morgan specific, but really all they were doing was catching up to the rest of the market. See them sort of lagging underneath Wells Fargo in this case. Let's look at the rest of the industry and how that pans out. Pull that up. See if they lag the rest of the industry. I suspect they did, and they did. So they're just sort of catching up to the rest of the business where they've traded before in the past throughout 2010, 2011, before a little bit of a split happened in mid-2012. Got right back to it in 2016, so still a little bit of a discount from a price-to-book ratio here on JP Morgan Chase when compared to the rest of the banking industry. Okay, so there's that. So let's look at the consolidated surprise here and see what have these guys done on earnings. It's not much. Is this another one of those scenarios, folks? Look at this. I mean, these are just puffs, just little sighs, little squeaks. They don't do anything. Immediately following their report, the last time JP Morgan had a move was 2016, March 2016 quarter. You got a 5% move out of JP Morgan. Before that, you had to go to December of 2014 before you got anything really on that earnings report. And so what predicated that, these moves? You know, nothing much. I mean, a decent surprise here, a 7% surprise, but you got the same thing, you know, the previous quarter and didn't get anything. A little bit of a disappointment, and then it moves. So It's going to take something significant, I think, to whip these bad boys around in any way, shape, or form. Okay. Let's look at the charts. Now, the cool thing about using this free stockcharts.com, and the reason why I still use it, even though it's kind of the dinosaur, because you have to use Microsoft Silverlight, so I'm actually using Internet Explorer. Like, what is this, like 1995? Like, I'm using Internet Explorer. Actually, I didn't use Internet Explorer in 95. Man, when did I get the internet? I don't even remember. Was it high school? Anyway, some archaic internet service, which I don't use. Just Internet Explorer, using that browser. But right now, it remembers what you drew inside of it. Okay, so a long time ago, probably our last, look at this, was like June, July. We must have done JPMorgan, and I drew some fibs. And look at how remarkable these have held up. So this was the low here to the high here, okay? And these are flipped because I did the lazy man's thing. I know, does my mom know? Yeah, I don't know. Remember when I used to have to like call, my mom would be upset because I was taking up the phone line, dialing in. No, I used to dial in, Kurt. My mom would yell at me because she wanted to like make a phone call before she had a cell phone, and I was on the internet, and she was not happy about that. I remember trying to play like Command and Conquer with my buddy, and she was like worried about rates or something. It was absurdity. Anyway, so my point is that these numbers here should be flipped a little bit. Okay, so actually this 61.8 is the 38.2% retracement. So if you see me saying numbers and it doesn't quite add up, it does add up. It's just flipped. So note this move back to the 50%. Now the 50's fine. The 50% retracement. And then now we've got another leg higher, which stalls out at the 61.8% fib extension. Comes back to touch the 50-day, and then is on the move again. Now, I can almost guarantee you that if I drew the 200%, which would be the 100% extension here, that it's ticking this. How much you want to bet? We're just going to do it. Oh, man, that's crazy. Right there. You see that? Spot on, the 100% extension. Now, normally I usually stop at that fib extension. I don't go too much further. But I'm just going to leave this here. And I'm going to leave that so in this case, this is 161.8% extension. I'm just going to leave that bad boy there. For giggles, and see if that still comes into play. So that puts us basically like $1.15 here on JPMorgan Chase. So let's keep that in mind. The other thing, obviously, to keep in mind is a 50-day, which is down at 103.54. So 103s, 115s, something to keep in mind. Although I'm going to tell you, I highly doubt that bar chart has either of those in the ballpark right now. Which is, hey, who wants some San Juan basis swaps? Where does that? How does it even come up? Who's on barchart.com googling that or looking that up? That's what I want to know. Who's like, oh, you know what? I got to get my San Juan. I got to check in on those San Juan plots. Nobody in the history of the world has ever looked that up. The page count for that page is officially 1. So these guys are before the bell. Maybe I should clarify this. Before the bell Friday, if I'm not mistaken. Let's just double check here. That's right. Before the bell on Friday. So rest of the trading day today. All of tomorrow to figure out this is what you want to mess with. So we're going to look at this just front day. And this is going to give us kind of the purest expectation from the market that we can get. So we're going to use these 110s. Bust out that handy dandy calculator, my friends. And what do we got? Up here, down here? Nope, don't go doing that. There we go. 110 put right now. 147 by, or I'm sorry, 146 by 148. We're going to call it 147. At the money put is 85. 237, 232. What is going on, Dave? 232 divided by 110 is 2.1% that they're. You've got me intrigued. I'm sorry, Trevor. I have to see what you're talking about here. Okay, well. I'm not going to call you the boy who cried wolf. But back to JPMorgan Chase. All right, let's go back to the bar chart here. So we're only looking for about a 2% move, about a $2 chuck out of here. For the lotto people, we might come back and look at this. I mean, that's absurdity. Of course, you've got next week's. We're going to go to the February expiration. That's right, February. We're already looking to February. Do the stacked view. Just to mess up your Iron Condor, Trevor. They're just right. They're just right there. All right, we've got the stack view, which means we've got calls on the top side and puts on the bottom. But here's the problem. When you get out to these monthly expirations, you get this situation where now you only got $5 between them. And it doesn't make for good options trading for us. So what you got to do is you just scale it back and hope there's enough liquidity in here so that you're not going to get totally raked over the coals. And you're not. You see these spreads are still nice and tight. Just a few cents between them. Should be all right in here, okay? Yes, I know the open interest is not super high, but you'll be able to play in this ballpark with these spreads this tight, no problem. So we said 115s. And then 103. Really? 103 seems far way off, doesn't it? Because it is. And the market's really only expecting a couple of bucks move, so the market's expecting 108. What's the swing low here? 107.70. Also corresponds to that fib level. So we do have this fib. We also have the swing high of 108.40. So I think you can camp out underneath there. So let's call it 108s even. So bulls, here's an idea. Oh no, that's right. I was looking there. That's all right. Okay. So here's a bullish idea for somebody looking for a credit spread. Selling the 108-107 put spread, you're going to get 128 for the 108. Simultaneously buying the 107 put, you're going to get back 102 of that. So you got a 26-cent net credit. The amount of money you're going to have at risk is the difference in strike prices, which is a $1 holler minus that 26 is 74 cents. So you can make about 35% on this. And all you need is shares of JPMorgan Chase to close at or above 108 at expiration. Now, look, we went out to this February 9th expiration, and we can find 26 cents or 35%. Okay, now I want you to keep that in mind. Now let's drop down to that next week. And let's look at the same thing. 108, 107. And you're going to notice you're not going to get paid as much. So selling that 108 put rather, you're going to get 56 cents. Simultaneously buying the 107 is going to cost you 38. So in this case, that's 18 on 82, or only 21.9%, 22% is what you can get there. So that's just kind of what happens, my friends. The further out you go, you get paid a little bit more, which is good because you're compensated for that extra risk and that extra time that's kind of sitting there. You know, you're waiting for it, right? So let's go back. So basically what I'm saying is, after looking at that, we're not going to get paid as much. I'm more comfortable going to this February 9th expiration. On either side of the equation, whether you're a bull or a bear. So I'm going to say, here's a bull credit idea. Is short the February 9th. 108, 107. Put spread for 26-cent net credit. Now on the bullish side of the equation, we were saying that 115 is sort of the top there. On the bearish side of the equation, rather. I would agree with that. So the bears, this is just pretty easy. You sell the 115 call, you get 85 cents. You buy the 116, 65 cents. So your net credit is 20 cents. The amount of money you have at risk is 80 cents. So you make 25% on that. So here's a bear credit idea. Is short the 115. Well, let's put in this February so everybody knows. Feb 9th. 115, 116 call spread for 20 cents. Net credit. Okay. And that is a little further out, right? So that's why you're getting compensated a little bit less. So on this bullish side, I tucked in at 108. So that was only $2 out of the money. Whereas $2 out of the money on the bullish side is 112. I think this takes a little bit more bravery, selling a 112, 113. But look at this 113, 114. This might be a little sweet spot here. Or even the 114, 115. That's 24 cents. No, this is a sweet spot. Let's look at this. Here's another one. If you sold the 113, you're going to get 141, simultaneously buying the 114, 109. So that's a 32-cent net credit with 68 cents at risk. That might be better. I think a more aggressive bearish idea is short 113, 114 call spread for 32 cents. Feb 9th, right? So we also know that this JPMorgan doesn't really move all that much on these earnings reports, okay? So I'm just going to throw this out there for you non-directional folks out there. What if you did both? So an iron condor here, you'd get 26 cents plus the 32 cents, so basically 58. And I know these numbers are based on delayed numbers that I'm looking at here, and the actual number may not be perfect for you guys over there. But listen, if you were able to get more than 50 cents of credit, in this case it shows 58 cents, the amount of money you're going to have at risk is only going to be 42 cents. So you can make pretty much double your money, more than double your money on that trade. But this is the problem, is it's a very tight condor. So you would have to have, there's only a $5 range that this stock could trade in for you to make your max gain. But what you can do is you can put that on, knowing that JPMorgan doesn't really move all that much on earnings, and then you can always peel one side off. So the implied volatility gets sucked out and you can cover. You don't have to hold it for the whole time. So there could be a scenario where we get into this, you put on a condor, you get a 58-cent credit, and then after the earnings report, it's only going to cost you 35 cents to close it. That's still a victory, especially if it's only a one-day kind of trade, okay? So something to take a look at. So I'm going to say, I know I've been aggressive with these condors lately, but I think that's what I'm going to do. The trade that pays is the Iron Condor, Feb 9th. We're going to say 108, 107, 113, 114 for 58 cents. And if anybody does it, I'd like to know kind of where you are getting filled. Want to be kind of accurate, but look, I mean, just look. So it's just been, so my thinking is just that these guys just haven't, you know, they don't move much. They chop around a lot, and we are starting to price in. You know, they're pricing in the bullish news already. We've had a little bit of a run up, and a stock that, you know, they did get up above this 108. And it is starting to creep higher just a little bit. But I think that you'll have enough time to jump out of the way if this thing comes barreling down at you. So that's what I think. Yeah, kind of just chop city. Chop city. So I think you can benefit from some of that. And again, so that's kind of a more boring trade, right? Something you keep an eye on here and there. It's not the sexiest thing in the world, but, you know, banks aren't really the sexiest things in the world, so it doesn't matter. In terms of lottos, I think I wouldn't go that just one day. I mean, I guess you could if you really want to be a madman, but if you go out just one more week, you could still find cheap stuff. It's kind of 114 is cheap. And yeah, Jeff, I think a lot of people are more bullish than bearish on these banks right now. You can see that in the, just look, the 110 call is 186, the 110 put is 122. So there's been some more bullish bets rather than the bearish bets. So that's why you're getting compensated more for jumping in front of it. But we'll see. We shall see. So that's all I got for you guys here on the JPMorgan, just kind of what I'm thinking. I don't know that there's going to be any huge spikes in this out the gate. I just don't see it. Of course, there's no way of knowing how the market's going to react to these early earnings reports. We've just seen that they haven't done so, really haven't moved a lot with JPMorgan and such, so we'll see. We shall see. All right, well, that's all I got for you here today on Zach's Live Trader. I will be in the chat a little later today. Got a few things I got to take care of before I can mess around in there, so there's that. And tomorrow I'm going to try to piece together some semblance of a GBU. But I don't know how much is on there that we haven't talked about, or I don't even know where we're at with that. So I got to kind of piece that together. And then, of course, Friday we're going to do a show. And during Friday's show, even tomorrow, I guess, first I'll be in the chat. We're going to take a quick look in the chat on Delta, see what ended up happening there, and if we could make, if we catch something there. But we'll also revisit that on Friday, because with those post-earnings trades, you don't necessarily need to catch it that day. You can catch it the next day or a couple days after too. So that's what we'll be discussing. Friday is a morning show, a little bit earlier on. So we'll go from there. So that's all I got for you folks here today on Zach's Live Trader. Thank you so much for hanging out with me again. And I will see you all mañana. Have a good one.